Hello, friends. In the past, I've done a mortgage video on buying power in a rising rate environment. Well, we're no longer there. We're currently in a lowering mortgage rate environment. Last week, we hit a historic U.S. all-time low in mortgage rates forever. Um, Average rate across the United States was 3.290%, the lowest it's ever been. So for this example, we'll use comparing a 4.25 interest rate to 3.25. 4.25 might have been what you were pre-qualified for a year ago, and now that we're at 3.25, what does that do for us? It has some pretty good tangible effects. So let's take a look. For our example, I'm going to use the mortgage P&I payment of $2,500 a month. That's the same payment we were shooting for in the last video, so we'll try to stay consistent there. I hope this is okay. There we go. With a P&I payment of limit of $2,500 a month, when we're at 4.25, we're looking at a mortgage amount of $505,000, right? 505,000 at a 4.25 gives us a monthly P&I payment of $2,484. Cool. This is not where we're at anymore. We're closer to the 3.29, which was the national average. So let's use 3.25 just for this example. Just by lowering the rate by 1%, we've now increased just our qualifying mortgage loan amount to $570,000. That's an increase of $65,000 for doing nothing, right? We didn't make more income. We didn't change the type of property that we're looking at. We're just in different times with different rates. So that's pretty cool. We drop the rate, we increase our loan amount, payment stays relatively the same. Okay. Now, more importantly, what does that do for our sales price? Um, I have this kind of on the side here. This, is what our sales price would be. Let's assume we put a 20% down. Obviously, these mortgage up here then would be this 80% shaded area. And I just break that down just so we see. So these sales prices, right, are going to be the entire amount. At 4.25 with a $505,000 first mortgage, we're looking at a max sales price of $631,250. Now, again, we didn't make any more money. We didn't change the type of property that we're looking at. We didn't pay off any debts. Same scenario, different time, only different variable is a lower interest rate. We're now looking at, with an increased loan amount, respectively, an increased sales price amount, $712,500. That's an increase of $81,250 on your sales price just because of this one change in variable, this 1% drop in rate, right? That's pretty cool. We didn't do anything for that. So what does that mean for us moving forward? If you were pre-qualified maybe a year ago, you definitely want to get in touch with me, preferably, to reevaluate your pre-qualification. I'm sure you qualify for more right now. If you were on the sidelines or a little bit hesitant about buying because maybe you wanted to live in town, but town is pretty expensive as compared to the outskirts area. Maybe that $81,000 increase in sales price is the difference between moving into town and being a little bit farther out. It's just a good time to reevaluate and look back and say, hey, we have more buying power. I guess that's the name of the video, right? Buying power in a lowering rate environment. We now have more buying power. We can afford more. Nothing changed. We're just in different times. So it's a really good idea just to take advantage. Please feel free to contact me directly if I can help you at all. I'd be more than happy. Pre-qualification, refinance, just to reevaluate where you are currently. That's about it. I'm more than happy to help, and you have a great week. Thank you very much.